Yes, sir.
Okay.
Yes.
So today the topic is accrual orders or imputed cost calculation. So accrual orders means accrual concept of accounting is also required in the case of cost accounting. You know what is accrual cost of accounting? What is the accrual concept of accounting? We have seen already in the financial accounting. But in cost accounting also, why do we need for the accruals? What is the necessity for accruals in the cost accounting also? This is used for processing irregular expenses like bonus, leave travel allowance, and gratuity, etc. Here, bonus means it is the gratuity bonus, not the production linked bonus. Right? See, this accrual orders is used to process one-time expenditure. Say, for example, every year in the month of March, we pay bonus to the employees. As I said, it is not the production linked bonus, right? It's not paid every month. This bonus is paid as a gratuity bonus to all the employees in the month of March, right? In the last month of every fiscal year, we pay some bonus to the employees. Bonus is expenditure, right? So every month we calculate the cost of production. So for that purpose, what we do, we add all the expenses incurred. Now, here, this bonus is paid and accounted only in the month of March. In that case, if you look at the cost of production of month of March, right, it is unduly inflated. Then the management may come to the misconclusion that there is a lot of inefficiency in the month of March, right? So that's why what we do is, and also always we have to see that the cost of production is consistent every month because we can easily identify the inefficiencies. If the cost of productions are not consistent, it is a little bit difficult to identify the inefficiencies. That's why we have to see that the cost of production is consistent every month. But here, the bonus is paid in the month of March, and the cost of production of month of March is unduly inflated. So the management may come to the wrong decision that the inefficiencies in the month of March has increased like anything. That's why what we do is you create a provision in controlling. Means creating the provision in controlling means we assume that some amount of bonus is paid everywhere, every month. We assume that some amount of bonus is paid every month and that is accounted in cost. Then that is taken as part of cost of production of every month. So that the cost of production is consistent every month. Say, for example, last year you have paid a bonus of 1 crore 20 lakhs. Now, this year also, right, you consider that 1 crore 20 lakhs last year paid, right? So 1 crore 20 lakhs divided by 12, 10 lakhs per month. So, on the basis of the bonus paid last year, this year also, we consider that 10 lakhs bonus is paid every month in cost accounting, and that is taken as part of cost of production, so that the cost of production every month is consistent. That's why we have to create the provisions. We have to create the provisions in control. So this is used for processing the irregular expenses like bonus, LTA, leave travel allowance, and gratuity, etc. When the accrual order calculation is executed, only CO document is posted. The accrual calculations are used only in controlling for the month-end provisions. The cost limit category 0. It is the primary cost limit category. Accrual and deferral per surcharge is used while creating the cost limit. There are different methods to calculate provisions in controlling component. Say, for example, right, first method, accrual and deferral documents. In FI, every month you provide for accrual expenses. So every month you may be providing for bonus. Remember, it is not production linked bonus, it is gratuity bonus. Means we are paying the bonus to the employees as a token of recognizing their services rendered by them through the previous year, right? This is called gratuity bonus, okay? So every month in FI also, we provide for the gratuity bonus. For example, we are in the 2018 fiscal year, right? In that case, on 30th for 2018, here please rectify the date. 30th for 2018. It is not 1/4, 30th for 2018. So you create the provision in F5, right? That is the accrual document you post in FBS1, right? Then debit bonus account, credit outstanding expense account. Let us say this is 10,000, right? So this bonus is, it's an expenditure, right? Bonus is an expenditure. So that is posted to respect to cost center. Let us say that is posted to A, cost center A, right? Then in the month end of April, the cost is allocated from the cost center to the production cost. So the production cost is correct, right? So cost center A, 30th for 2018, 2 bonus 10,000 on the same day by allocation to production cost 10,000. Then the production cost for the month of April is correct. Till now it's clear for everybody. Is it clear till now?
Sir, I didn't understand the cost center. Yes, sir.
Cost center?
Yeah.
No,
What you?
we are debiting bonus, right?
Yeah, yes, sir.
Bonus is a cost limit.
Sir.
So it has to be posted to one cost center. So this bonus we are paying to the people working in the, we are assuming that this bonus is paid to the people working in the cost center A.
Okay, sir.
That is identified with the cost center A.
Okay, sir.
Okay.
Okay.
And from the cost center A, that bonus is transferred to cost of production.
Okay, okay, sir. Okay, sir. I got it.
Now, this outstanding expense account is credited, and that will be carried forward to next month. Right? So on 30th for 2018, 2 bonus 10,000, then by allocation to production cost 10,000. So the production cost for the month of April is correct. Here we are using accrual reversals. So after posting the bonus provision on 30th for 2018, it is reversed on 1/5/2018. Like what? Outstanding expense account data to bonus account. Again, that is posted to cost center A, right? Then again, on 31st May 2018, you create the provision for bonus. Please rectify the date. 31st May 2018, right? So in the cost center A, right, credit balance will be there on 1st May, right? That's why bonus account is debtor to 20,000. So make it as 20,000. It's not 2 lakhs. Make it as 20,000. Bonus account debtor 20,000, which is debited, and that is posted to cost center A. To outstanding expense account 20,000. So then what happens is cost center A 1/5/2018 reversal 10,000, right? So on 31st May, your debited provision 20,000, right? So on 31st May 2018, again by production cost, 10,000 balance is there, no? That is transferred to cost center A2, right? Production cost. Again, the cost of production for the month of May is correct. Like that, when you create the provision in F5, that is posted to cost center, and again, when it is reversed, that is cancelled. That's how the bonuses provision are considered in the cost account. This is one method, right? Next, the second method, open item management. So you create the outstanding expense account as a open item management account, right? So on 30th for 2018, you create the provision. Bonus account debtor to 10,000 to outstanding expense account 10,000. Here, this is posted to cost and period. So here we don't use the reversal, right? We directly clear them, right? So at the end of the month, the cost from the cost center is A is allocated to the cost of production, so that the cost of production of April month is correct. This is another method, right? So in the cost center A, 30th for 2018, 2 bonus, then by allocation to production cost. So when you pay the bonus on 1st May, right, then you clear the open items in outstanding expense account in F-07. Again, on 31st May 2018, you create the bonus provision. Again, bonus account debtor 10,000 to outstanding expense account. So in the outstanding expense account, again, there will be liability. So this debit expense is posted to cost center A. Again, from the cost center A, that is transferred to production cost. Like that, every month we create the provision and that is cleared in the first of next, right? That is one method. Third method is accrual orders or imputed cost calculation. If you notice, right, the first method and second method, in the first method and second method, we are creating the provisions on the last day of every month because we prepare monthly financial statements. Suppose if you don't prepare any monthly financial statements, then will you provide for the bonus payable? Huh? You are not preparing monthly financial statements. In that case, do you provide for accruals? No.
No, sir.
Right? In that case, bonus provision is not considered in cost of. So your cost of production is wrong every month. That's why what we do is, see, we use the third method. This third method is used when you don't prepare the monthly financial statements, right? Some companies do not prepare the profit loss account and balance sheet every month. So they will not make provisions in the month end. As a result, the cost of production will show the wrong information from April to February, right? But the companies have to follow the accrual system of accounting at the end of the year compulsorily. So they make provision at the year end only. So the cost of production every month is wrong. Still not clear? Then, in SAP, when we evaluate the production, the accounting entries are generated automatically on the basis of production cost of that month. So always, right, we post the entries. Production is always carried out at the plant. So when the production is completed, right, we have to post accounting entries to recognize the cost of production to books of accounts and also closing stock. So in SAP, when we evaluate the production, the accounting entries are generated automatically on the basis of the production cost of the month. As the provisions are not created every month, the production valuation is wrong. So we have to create the provisions in controlling. Here, normally the salaries are, normally the bonus is paid as percentage of your salaries, right? So every month we post the salaries in a field and they are posted to respective cost center, right? So on the basis of the salaries posted to the cost center every month, the bonus is calculated at the predefined percentage. The bonus is debited to the respective cost center and it is credited to the dummy cost center every month. So when the system calculates the bonus, right, as a percentage of salaries, salaries is posted to every cost center, right? So the system calculates the bonus as a percentage of salaries posted to every cost center. Then the respective cost center is debited and the same amount of bonus is credited to dummy cost center. So we create one dummy cost center and that is credited to dummy cost center. Then the bonus from the cost center is transferred to the production cost every month. As a result, the cost of production is correct every month. Then the dummy cost center is created with the bonus provided every month and it is accumulated in the dummy cost center as credit balance. I will show you the example now. Then at the end of the year, when the bonus is paid and posted in financial accounting, it is debited to the dummy cost center, which is set off against the credit balance in the dummy cost center. See, salary is posted to cost center here. You can take the example of only one cost center. That is applicable to all cost centers. Salary is posted to the cost center A, for example, say 1,000. Bonus percentage 10%, right? Then bonus amount is 10,000. Then that is debited to cost center A and credited to dummy cost center. So cost center A, okay, on 30th for 2018 to bonus 10,000. Then dummy cost center by bonus 10,000. Bonus from the cost center A is allocated to production cost and the cost of production is correct. But every month there exists the credit balance in the dummy cost center. Every month you calculate provision, no? Right? So dummy cost center, every month it is credited with the bonus. 30th for 2018, 10,000 credit. This is the dummy cost center. 31st May 2018, 10,000 credit. 30th June 2018, 10,000 credit, right? Then 31st July 2018, 10,000 credit. Then 31st March 2019. Please rectify this. This is 2019. So 10,000. Like that, every month, 10,000 bonus is created to the dummy cost center, right? So as on 31st March 2019, there is a credit balance of 1,20,000. Then on 31st March 2019, here also, please rectify the date. On 31st March 2019, bonus provision is created in FI and the following entry is posted. Bonus account debtor 1,20,000, but this is posted to now dummy cost center. Already in the dummy cost center, there is a credit balance of 1,20,000. Now this debit is posted to dummy cost center. Credit 1,20,000, now debit is coming 1,20,000. Then that is cancelled. Clear, no? So 31st March 2019, here also rectify the date. And here also, 31st March 2019, rectify the date. So 1,20,000 credit debit and 1,20,000 credit, dummy cost center. That's how we have to create the provisions in controlling. For that purpose, we use the accrual calculation. I hope it's clear for everybody.
Sir, at the end of the year, outstanding expenses will be 1,20,000.
Yes.
Then at the end of the year, they will pay.
They will pay. Suppose if you create the provision, outstanding expenses will be created, right? Suppose
Yes.
you are paying the bonus on 31st March itself.
Yes, sir.
Then bonus account debtor to bank.
Okay.
Your cash balance is reduced on asset side.
Yeah.
Right? And your profit is reduced.
Okay, sir.
Liability side.
Sir, my doubt is like, we'll pass the salary entries in FI and it will be allocated to all the cost centers.
Yes.
And we also pass bonus entries in FI.
At the end of year.
At the end of year. So, for example, if the people who are working in administration department, for them we pass the bonus entries. That entries will be passing in only in FI.
No. In CO.
For any people, the bonus concept is we should pass in CO.
Yes, every month.
Every month, any people, whomever the department it is. It's not only the production
Exactly.
department, but in the
Not only
administration.
production, even the canteen, even the power, right? Even the
Okay.
watch and what. In every department, we pay the bonus.
Okay, whomever will pass the bonus, we have to pass through CO only.
Yes.
Okay.
When you are not preparing financial statements every month.
Okay. Then if we prepare financial statement every month, then what is the
Then there is
procedure?
an accrual calculation. Because every month when you prepare financial statements, you provide for the bonus in FI itself, right?
Yeah, exactly.
Wherein you debit bonus, right?
Yeah.
So bonus means expenditure.
Yes.
That's the primary cost element. Then that is posted to respective cost centers. Clear?
I have a little confusion, sir. What you are telling is clear, but even if we prepare every month financial statements, still we are passing bonus entries in CO.
No. We pass the
First two.
entries in FI.
No.
See,
The first two methods
to cash, right?
Yeah,
Every month
exactly.
you post the entries, salaries are to bank, right?
Yes.
Salaries is a cost element.
Yes.
They are posted to respective cost centers, right?
Yes.
Similarly, you provide for the bonus provision every month in FI.
Okay. Yes.
Right? Like you have provided for rent account data to outstanding expenses, right?
Yes.
Bonus
Similarly,
account data to
bonus
outstanding
account data to
expenses.
outstanding expenses.
Yes.
Bonus is a cost element.
Yes.
That is posted to respective cost centers.
Okay.
Then
Yeah.
there is a necessity for posting entries in CO. You are posting entries in FI. From FI, they are transferred to controlling to coin process.
Okay. Okay, that is clear. Then in the method, in 3 methods, first and second, we are passing in CO. Every
We are
month.
posting only in FI, madam. These are all FI entries only. In CO, there is no accounting entries. Will you notice any entries in controlling?
It says somewhere you read the point. It's like it will be updated only in CO.
That means what? Cost centers are updated.
Oh,
Not the account
okay.
balances.
Okay. That is where I made a mistake. Okay, sir.
Controlling
Yeah.
objects are updated.
Okay.
When you post a document in FI,
Yeah.
CO document is posted means what? The respective controlling objects are updated.
Yeah, okay, sir.
And
That is
we
where I
can
made a
see
mistake.
debit or credit in controlling.
Okay.
Got it, no?
Yeah, thank you, sir.
So this accrual calculation controlling is necessary only when you are not preparing monthly financial statements. Now let us create one GL account, bonus account. FS00. Template, huh? Okay. GL account is equal to 4,360,000. Oh, salaries. This is personal cost, no? Let us use 4,105,000. GL account is equal to 4,105,000. Company code SSKV. Click on with the template. GL account is 4,100,000. Company code SSKV. Click on enter. Click on enter. Short text is equal to bonus account. GL account long text is also bonus account. Click on save. Click on edit cost element. Valid from 1/4/2022 to 31st December 9,999. Click on enter. Cost limit category 03. R3, accrual and deferral per surcharge. Cost limit category 3. Accrual, it is not actual, right? Please rectify this. Accrual. Deferral per surcharge. Click on save. Now, creation of dummy cost center. KS01. So you can create it under any production service, anything you can create. Cost center is equal to SS02-006. Cost center is equal to SS02-006. Valid from 1/4/2022 to 31st December 9,999. Click on enter. Name is equal to dummy cost center for bonus. Name is equal to dummy cost center for bonus. Description is also dummy cost center for bonus. Person responsible A. Cost center category 2. Hierarchy area SS02. Company code SSKV.
Sir, in the material, it is caste center category 9. 9 is there, sir.
Okay, let us use 9 only. You can use any category because it's a dummy cost center, no? So it doesn't make any difference, whatever category you can use. Okay, let us go according to material. Hierarchy area SS02. Company code SSKV. Business area SSKV. Currency INR. Currency INR. Click on save. Ignore the warning message. Then, word structure. The one word is missing in the step. Maintain word structure. Maintain word structure. Here some space is there, no? Please write down. The word structure. The word structure is also called costing sheet. The word structure is also called costing sheet. In the product cost planning. In the product cost planning. The product cost planning. Using the word structure, we can calculate provisions. We can calculate provisions in the cost center accounting. In the cost center accounting. And we can calculate overheads in the product cost planning. In the product cost planning. So what is this product cost planning, right? We will discuss later on. We have the topic on the product cost. In every word structure, we define the following rows. We define the following rows. Number one, base rows. Number one, base rows. Here, we define the cost elements. We define the cost elements on which bonus is to be calculated. We define the cost element on which bonus is to be calculated. So here I told you, the bonus is calculated as a percentage on the salaries, right? So here in the base rows, we define that the cost element numbers of salaries and wages on which bonus is to be calculated. They are called base rows, right? Next, number two. Overhead rate rows. Overhead rate rows. Here we define the percentage rate. Here we define the percentage rate at which the bonus is to be calculated. At which the bonus is to be calculated. Next, number three. Credit rows. credit rows. Here we define the controlling object. Here we define the controlling object to which the calculated provision is to be credited. To which the calculated provision is to be credited. The calculation provision is to be credited. Just a minute. To which the calculated provision is to be credited. So these are the three rows, right? Now we will see how to define this, right? Here, it's a little bit big step, okay? So I'll be going very slowly. Please verify whether every step is there or not, okay? Sometimes some of the steps may be missing here. I will go very slowly, right? Please verify whether every step is clearly there or not. SPRO, path is SPRO. Controlling cost element accounting, accrual calculation, percentage method, maintain overhead structure. Maintain overhead structure. Click on create overhead structure. The word create is missing. Click on create overhead structure. Please add the word create. This is called create button. Overhead structure is equal to SSKV. Overhead structure is equal to SSKV. Description is equal to overhead structure for SSKV bonus. Overhead structure for SSKV bonus. Click on save. Click on save. Row is equal to 10. Give some number. It can be up to 3 numbers, 3 characters. Just like I'm giving 10. Row is equal to 10. Base is equal to SS1 or SSK1. Base is equal to SSK1. Base is equal to SSK1. Click on enter. Click on enter. Then name. The name field is missing. Name is equal to salaries and wages. So the bonus is to be calculated on salaries and wages. Okay, let us take only salaries. You can say salaries. Name is equal to salaries. Click on create button. Click on create button. This one. See, row 10 SSK1 salaries base, right? Now again, row is equal to 20, give some number. Now overhead rate, SSK2. Overhead rate, SSK2. Click on enter. Click on enter is missing there. Name is equal to bonus percentage, or you can say simply bonus. 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 Just a minute. Click on create button, then row 20, overhead rate. Okay. Data will be lost. You still want to cancel the process? Yes. One create word structure SSKV. Then overhead structure for SSKV bonus. Click on O is equal to 10. This is equal to SSK1. SSK1. Click on enter. Oh, salaries it has taken. Okay. Now base is equal, row is equal to 20. Overhead rate is equal to SSK2. SSK2. Description bonus. Yeah. After overhead rate, description, it's correct in the material. Description is equal to bonus. From is equal to 10 to 10. That means this is row number. From row 10 to row 10. Means this bonus percentage is to be applied row 10. Row 10 to row 10 means this bonus percentage is to be applied on the row number 10, right? And credit is SSK. Credit is SSK. So the credit is to be defined under SSK. Then click on enter. Now dependence. Dependency is equal to KRS1. Means controlling area. Controlling area wise, the bonus is to be calculated. Controlling area wise, the bonus is to be calculated. Click on create button. Click on save. Ignore the message. Click on enter, click on save, ignore the warning message. Now, keep the cursor on word structure SSKV. Keep the cursor, you can scroll down. Keep the cursor on word structure SSKV. Otherwise, we can use this find button. Okay. See? So keep the cursor on SSKV. Click on assignment button. Click on assignment button. This is the assignments button. Controlling area is equal to SSKV. Then select actual accrual radio button. If you want to calculate planned accruals, you can select a plan. Click on continue. Valid 01/2022 means first period of 2020. Valid from 01/01/2022. Valid to 12/2022. 12th period of 2022. Word structure. SSK. Just a minute, I'll be back in 1 minute. Yes, I am back. I'm sorry for the delay. Word structure is equal to SSKV. Click on save. Double click on word structure SSKV. Keep the cursor on base SSK1. Keep the cursor on base SSK1. Go to menu bar. Yeah. Go to menu bar. Just a minute. Go to menu bar, comma, go to menu bar, go to calculation base. From cost element is equal to 4,100,000. From cost element is equal to 4,100,000. So in the base SSK1, we are assigning 4,100,000 cost element. So the system will calculate the bonus, right? 4,100,000. Click on save. Then keep the cursor on overhead SSK2. Go to menu bar, go to overhead rate. Valid from 01/2022. Means from the first period of fiscal year 2022, valid to 12/2022. Actual overhead 10%. Click on save. Then keep the cursor on credit row, SSK. Go to menu, go to credit. Company code SSKV. Company code is not there. Please add the company code SSKV. Business area SSKV. Valid to 12/2022. Cost element 4,105,000. Bonus. Cost center SS0 to 006. Means when the system calculates the bonus up to this period, right? The system will take the bonus calculated as a credit to this cost center under the name of cost element 4,105,000. Click on save. This is called overhead structure. Then define number ranges for CO transaction, KAZI, transaction code KANK. Controlling area is equal to SSKV. Click on change intervals. Sorry. Click on maintain groups. Keep the cursor on KAZI, actual cost center accrual. Here it's not double click, keep the cursor. Strike up the word double click, then make it as keep the cursor on KAZI. Strike up the word select. No, not select. Click on SN element group is sentence is there, no? That sentence is to be there after this sentence. Just you can put one arrow mark here. Click on SN element group. Now, not select, double click. Double click. The number any number 0. You strike up the word checkbox. Double click the number any number 01. Click on save. Now, posting of salaries within brackets optional. So already we have posted salaries last month, right? So if you want to calculate the bonus for the current month, you have to post the salaries to all the cost centers, right? Instead of that, right? Already we have posted salaries to all the cost centers, no? ASB1. See, look at this thing. SS01001 to SS02005, right? Cost element, 4,100,000. Last month, okay? 1/12/2022 to 31st 12/2022, right? See, for the department A, total salary is 15,000. Department B, 10,000. Department C, 50,000. Salaries, right? Administration department D, 12,000. Then watch and ward, 25,000. Sorry. Labor supply, 7,20,000. Then quality inspection, 3,45,600. So total salaries posted is 11,77,600 rupees, right? So for every cost center, salaries was posted, right? So you need not post the salaries again. If you did not post salaries, right, you can post the salaries to all the cost centers in the country. So I am going to calculate the bonus for the month of December. So I am not posting any salaries here. So accrual cost calculation run, KSA 3. Cost center is equal to SS01001 to SS02005. All the cost centers. Period is equal to 9. Fiscal year 2022. Select test run. Select detail lists. Click on execute. See, cost center SS01001, two cost center SS02005, period 9, fiscal year 2022, controlling area, currency, exchange rate type here. Then execution type, accrual calculation executed. Then accrual calculation executed, number of cost centers 7. No change, 2 cost centers. Total 9 cost centers. Right. Now click on next list level. This is called next list level. See, cost center, right? SS02006, 1,500. Then SS02006, 1,000. Sorry, this is the partner object, right? See, SS01001, 1,500 bonus. SS01002, right? 1,000. SS02001, 5,000. SS02002, 1,200. SS02003, 2,500. SS02004, 72,000. Because total salaries is 7,20,000. SS02005, 34,560. And these cost centers are debited and this cost center is credited. Clear? Here, deselect test run, right? Okay. I have selected test run. Okay. Deselect test run, click on execute. Then click on next list level. So all these cost centers are posted, right? Now, display cost center wise report. ASB1. Cost center is equal to cost center is equal to SS01001. Cost center is equal to SS01001 to SS02005. Now cost element 4,105. Cost element 4,105. Click on execute. See SS01001 bonus 15,000. CO partner object, dummy cost center for bonus. SS01002 1,000. SS02001 5,000. SS02002 1,200. SS02003 2,500. SS02004 72,500. SS02005 34,560. Right. Now observe that bonus is posted to cost centers all within brackets all. So production cost center, at the end of the month, the bonus cost is transferred to production or produced during the month and production value is correct. In the month end, the balance in the cost center is 0. Now click on back arrow. Click yes on the message. Cost center is equal to SS02006. Cost center is equal to SS02006. Dummy cost center. Click on execute. See. So for every cost center, one credit is posted in the dummy cost center, 1,17,760. $1,17,760. Clear? So like that, every month the bond accrual calculation is executed and the bonus is posted to these cost centers. Right? Now, creation of bonus provision on 31st March 2023. Creation of bonus provision on 31st March 2023. Transaction code F-02. Or bonus paid. 31st March 2023 document date. 31st March 2023 document date. Type is equal to SA. Company code SSKV. Posting date 31st March 2023. Period 12. Currency INR. Posting key 40. The account is 4,105. Bonus account. Click on enter. See, it is giving one warning message. Check document date is in future. Just ignore the warning message. The amount is equal to 1,17,760. Business area SSKV. Cost center SS02006. Within brackets, dummy cost center. Dummy cost center. Text is equal to being bonus provided. Posting key 50. The account is 1,500,000. Outstanding expense account. Click on enter. The amount is equal to asterisk. Business area SSKV. Text plus. Click on save. Now, display cost center report for dummy cost center, KSB1. Cost center is equal to SS02006. Posting date is 1/12/2022 to 31st March 2023. Posting date is equal to 1/12/2022 to 31st March 2023. Click on execute. Balance 0 C. In the dummy cost center, balance is 0. Suppose here the total bonus provided is 1,17,760, right? But actual bonus you are paid 1,50,000. Then what happens? That is also posted to dummy cost center. In that case, in the dummy cost center, there will be some debit balance, right? So from the dummy cost center to the cost is transferred to, the balance is transferred to production cost. So here, what we are trying to do is, we are trying to see that the cost of production is uniform every month, nothing else. As far as possible, we are trying to see that the cost of production is uniform every month. Okay. So with this, cost center accounting is over, right? Now we start internal order accounting. So before starting internal order accounting, we have to understand something more regarding the controlling object. So controlling
Sir, this is Joshna, sir. Sir, we have tried only the third method.
yes.
First method, sir.
This method.
Sir?
That is the purpose of this method.
Okay, first method, sir. First method.
First method already we have seen in Rentec. In the accrual reversals are there, no?
Okay.
Here we are posting one FBS, one transaction FBS1, wherein we are debiting expenses. Now you debit bonus.
Oh.
That is transferred to respect to cost center.
Okay, sir.
So before starting the internal order accounting, we have to understand something more regarding the controlling objects. So what is controlling object? It is the entity for which the information of expenses and revenues are maintained in controlling. So till now we have seen only one controlling object, cost center, right? So we have posted expenses to the cost centers. So like that, that is the meaning of the controlling object. It is the entity for which the information of expenses and revenues is maintained in controlling, right? Now, there are two types of controlling objects. Number one, real controlling object. Number two, statistical controlling object. So, under the real controlling objects, we have cost centers, internal orders, cost object, then profitability segment, then project. So what is the real controlling object? These are the controlling objects to which we can post expenses and incomes directly. Posting expenses and incomes directly means, right? While posting expense and revenues in F-02 or in FB50, we give the controlling object name. That is called real controlling object. Say, for example, till now we have been posting expenses, right? Then at the time of posting expenses, you are giving the cost center. That is the meaning of posting directly. So cost center is real controlling object. Then the expenses and incomes posted to these controlling objects can be apportioned to other controlling objects. Means we have been posting expenses to number of cost centers, right? Then at the end of the month, we are transferring the cost of cost and service cost centers to other cost centers. That is the meaning of expense and incomes posted to these controlling objects can be apportioned to other controlling objects. So here, cost center is a real controlling object to post costs only. That means we can post expenses only directly to the cost centers, but not revenues. And internal order is a real controlling object. So to the internal order, we can post expense and revenues directly. Cost object is a real controlling object. So we can post expense and incomes directly to the cost object. Profitability segment is a real controlling object. Project is a real controlling object. Okay. So with these controlling objects, we can post expense and incomes directly. Then statistical controlling objects. These are the controlling objects to which we cannot post expense and incomes directly, but still sometimes you want to post expense and incomes to the statistical controlling objects also. But to post the expenses and incomes to the statistical controlling objects, first they have to be posted to one of the real controlling objects. The expenses and incomes posted to these statistical controlling objects cannot be apportioned to any other controlling objects. Then what is the use of it? They can be used only for analysis and decision-making purpose. Here, cost center is a statistical controlling object as far as incomes are concerned. That means incomes cannot be directly posted to cost centers. Even if you try to post incomes to the cost center, system will give the error message. For example, right, we have one production cost center. In the production cost center, at the end of the process, some scrap is inevitably generated. Sometimes you'll be able to sell the scrap and you'll be able to get some revenue. You'll be able to get some revenue, right? In that case, that revenue has to be posted to production cost center, but that is not possible. But still, I have to post that revenue to the production cost center only. For that purpose, first of all, that revenue has to be posted to one of the real controlling object. Like that revenue has to be first posted to either internal order or cost object or profitability segment or project. So in addition to one of these real controlling objects, we can post the incomes to the cost center. So if you want to post expense and revenues to the statistical controlling objects, first they have to be posted to one of the real controlling object. In addition to real controlling object, we can post them to statistical controlling objects. Why? What all this complexity? Right? This you can understand in the internal order accounting. Right? Here, internal orders are there under the real controlling object and also under the statistical controlling objects. So what is internal order first? Then what is the real internal order and what is the statistical internal order? This we will discuss in tomorrow's class. And your errors, right? Yesterday and the day before yesterday, year busy, no? Year end busy, no? That's why I could not concentrate. Tomorrow for sure I will do that. Your errors. Remaining things we will see in tomorrow's class.